Alright, so for this next section, I'm going to use TradingView for everything. It's a free charting website, and it's one of the best. I have preferred to use this over using some of the programs that I have, just because it's extremely easy to do stuff. It saves everything. It looks great. It's got a great UI, and it's easy to get around. So you can get there by going to tradingview.com and sign up for an account. My account there is Traders Insight, Traders_Insight. You can find me, find some of the charts that I do, and some of the people that I follow. So let's take a look at this. Here you're going to see markets most viewed. On the right, you'll see I have a watch list. Here I have the main stocks. I had to enter them in, but you can find them over here in the market summary. Here you have S&P 500, and I'll just click on that. And that's going to bring up the Standard & Poor's 500 index. It's probably the best measure, or at least the one that's looked at most for the performance of the broader domestic market. So if you click on Interactive Chart, it will pull up a chart that you can see the SPX 500, and we'll get into it a little bit deeper. Here we have a chart. It's for the SPX. I've got it zoomed in a bit right now, so if you just move your mouse around, you'll see that the mouse will show different things. It'll go to different places. If we zoom out, like this, you can see that there's more information contained. So let's zoom back in. And each of these little candles, as we call them, because this is a candlestick chart, is going to represent one time period, whatever the specified time period is. In this case, if you go up to the top left over here, you're going to see that it says 1D. And that essentially means 1 day. So every candle that we have here is 1 day's worth of information. And this can go back and back and back. So if we zoom out, we can go back into 2016, 2015, all the way back to 2008, 2009. The information goes really, really far back. But if we zoom in today, we can see that we have 1 bar for today, 1 bar for yesterday, and 1 bar for each day. Now we can change that by going up to this top left portion, and here we can change the time period. So if we want each bar to be a minute, then we can change it to 1 minute, which on TradingView is the smallest, but you can get smaller if you want. And then if we zoom out, you can see that each bar here is going to represent 1 minute of data. And we can keep on zooming out. So it's you can zoom in and see different things depending on the time period that you want, and depending on how you're trading. So let's just keep it at 1 day, where it is now, and let's zoom back in. So here, taking a look at it, we have green bars, we have red bars. Sometimes the bars have little things coming out the top or the bottom, and so these are called candles, and a candle is going to be comprised of 3 parts. It's going to have the real body. It may have an upper shadow, and it may have a lower shadow. All it needs to have is an upper body. So there's also going to be represented by 2 colors. In this case, we have green and red, and if you look at TradingView, we have green and red. It also can be black or white, or any other different color which you want to set it at. So in the green case, green is good. So green means that the price rose or has risen. And so if we take a look, we can see that in the green candle, we have a high up here, we have a close, we have an open and a low. And the close is above the open, which means that the price was higher at the close than it was at the open. And in the red, we have a close which is lower than the open, and that means that the price went down. So green means price going up, red means price going down. And the shadows are going to mean that the price went up and then it came back down, but it didn't close there. So it's either the high or the low. So let's go back to our chart and take a look. So yesterday we had a green day, and that means that the price went up, and the price went from, you can see it on the side. So down below, we're going to have our date, and on the right, we're going to have our price. So if you can see on the right, you can see that yesterday's open was around 23.12, and then yesterday's close was around 23.16, and then there was a low of around 23.11 and a high of around 23.19. And then today there was an open of 23.21, a high of 23.26, a low of 23.21, and a close of 23.25, which is where the market is at right now. If we zoom in very close on that 1 minute chart again, you can see all the detail that was contained in that one bar. So starting at the open today, you can see that it had the low at 23.21. It's got its high, which just hit a while ago, at 23.26. And then right now it's at 23.25. So all that information that's contained in that one bar is contained in all these little bars if you zoom into the 1 minute. So let's go back out to the day. So if we go back, you can see green, 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 green. So that means 4 up days in a row. And then we have these 2 reds. So that's a down day where the close was lower than the high, and that means that it opened up here and then it came down. So, and then it opened up here and it came down. And that's an interesting thing that can happen, is that during nighttime there's still trading that goes on, and the big banks and other institutions are trading the securities amongst themselves, and so the prices change. And so you can have it where like here it closes and then it opens higher the next day at a higher price, or it closes here and then it opens here at a higher price. So take that into account, where you can have multiple down days in a row, but like here the candles actually are trending upwards. So even though there's down days, it's trending upwards. It's a weird thing that happens. So let's go on, and now we're going to take a look at the market as a whole. So remember, the 3 things that we talked about earlier was that price discounts everything. So the price of the market right now is the fully informed belief of all the traders and all the institutions and everybody who has money invested into the market. So they believe right now that the market should be at 23.25 with all the information they have. Second is that price history matters, and so let's take a look at here. Since November 11th, which was when Trump was elected president, we've been on a tear upwards. So we've gone from 2080 all the way up to 23.25. So that's a big increase. And if you looked at this, it's really easy to tell that the market has been what we call trending, which means moving in one direction for a certain period of time. It's been trending upwards for almost 3 months. There's been a trend in the market to move upwards. So let's take a look at the previous 3 months. So if we move to November, from August to November, let me draw some lines. So if you look on the left here, you'll see that there's a trend line. So let's come back here to over here, and we're going to draw one trend line. So when we draw trend lines, we're always going to start at the low, and we're going to go and we're going to connect it to another low. So here you can see a trend line. And as long as the security, or in this case the general index, is moving along or above that line, it's still what's called in an uptrend. Let's take another trend line. So let's connect the last high from here, and then we can just draw it like that. Okay, and here you can see that there was a moderate downtrend in August to November. Now here you can already see two different ways of drawing a trend. If you're drawing an uptrend, you always want to be below. So you want to start out at a low and you want to move to another low. If you're doing a downtrend, you want to start from a high and draw to another high. So here we can see that we had one high, it wasn't able to push through, then it kind of was trending downwards. We had the election, and then the market came back up and it pushed through our previous trend line. When that happens and a downward trend line is broken, then we start with the uptrend, and we can start from the previous lows and then just keep on drawing upwards. So in this case, this trend has been pretty steep. Look at the difference in angle between this trend line and this trend line. So there's much more momentum, and there's a lot more belief in the price going up because the differences in the angle. Let's take a look at before. So previously, if we are looking for lows, we have to go all the way back to February to find the next beginning of an uptrend. And that was a pretty tumultuous period. And so we can just draw a trend line up here. So as you can see, the market just rocketed off. And during this time period, there's actually a few trend line breaks. So you had this one where the market kind of came down, came back up, tested, had like 2 bad down days, and then pushed right back up and pushed right back through that trend line all the way up, and then went flat and then came back down. So we have two different trends here. The first one was broken when it came through here, and these little bars came up and down, and it reestablished a new low. So our new low to low trend line would go off through here. And let's come over here, and we're going to draw another one. So previously we had this high, and we can draw through here, and there we go. So as you can see from what I've done, you can use these really easy to draw trend lines just to kind of give you certain levels where you can understand where the market is going. So if it's trending downwards, if it's trending upwards, it'll go back and forth because that's what the market does. So you can use these just to give you a visual representation of what's going on in the market. So that was probably a little bit longer video than I was expecting, but I really wanted to go into detail about the chart itself and how the price is on the right and the date is on the bottom, how the candles are made up. So you have a real body and an upper shadow and a lower shadow, which encapsulates the open, high, close, and low. Open, high, low, and close. And also that you can use trend lines to identify when the market is moving up and when the market is moving down. So let's go on to the next video.